All right, so the market's finished at the high note of the week. Very, very strong finish. But when you expand out to just be today, you'll see why we were so bullish today when we look at the whole week as a whole. So I'm going to break that down. We're also going to talk about this divergent move again in the Nasdaq and then the Russell. What that means. Can it keep going, and what would it mean if it keeps going? And then what does volatility tell us, especially from a seasonal basis? What can we expect from volatility? It really finished, it had a big whip around this week at the end of the week, up and then back down. So the fact that it is back down and where it's at, what does that tell us from a bigger picture standpoint in terms of what we can expect going not just into this next week or two, into July expiration and out of it, but even beyond that into August, September, and October, which is a very important time for the volatility index from a seasonal standpoint. I'm going to break that down. We're going to take a look at a trade today that has got a really nice setup for kind of that neutral trade where, the markets are bullish, but the markets aren't really bearish. I don't want to make any bearish trades either. And so this kind of setup is a great kind of set. You notice I've done a lot of them. So we're going to do another one today. So I'm going to show you what it is. So let's go ahead and get started. Today is Friday, July the 9th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. And you can see the nice good close to the week that we had. This is a daily candle, and we got the long lower shadows for the last 3 days. The bears have been in place here, but not today. We gapped up, we rallied all the way up, we closed at the high of the day. I mean, it's about as bullish of a day as you can get. We'll take a look at that gap here in a little bit, but that's a very, very bullish end to the week. Again, just 2 points off of the high of the week there. Intermediate posture, strongly bullish. That's not a surprise. Market sentiment lines falling below 80, but just barely. It's about as weak of a posture, long-term posture as you can possibly get. The near-term line turned up, stayed up, so it's above 60 again. We've been on this near-term rally now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. The time frame is typically 7 to 12. So, not only do we have going on 9 months of an intermediate rally without an exhale, now we're going on, which is very, very extremely long. We are now on a relatively long near-term run. And that's typical. I mean, we could go another week. I wouldn't be surprised if we went another week here with a near-term rally to ultimately end up 18 days. That's what happens when you're in kind of parabolic moves like we're in right now. Like we're above 30, actually above 33. We're down below 20. So it's trying to make this kind of parabolic run right now to finish things up, something like this. And I think we have this type of move coming into maybe beyond July expiration. So we'll kind of keep our eyes closed on. But how long and how big that move ends up being remains to be seen. But it seems to be the kind of run we're getting on right now. So let's go back to the market forecast. If you take a look at the Dow Jones here, I remember it did get an intermediate pullback here, but since the expiration, it's recovered to a new all-time closing high, right? An all-time closing high, even though we didn't get an all-time intraday high. If you look at the Nasdaq 100, that's what's leading this price action. This is the one that's making the biggest directional move. It's very, very bullish and doing very well going forward here. It's got a couple clusters. And again, it's starting an intermediate run. Keep in mind, though, that not everything is starting an intermediate run. It was just the NASDAQ 100. So the S&P as a whole obviously has not. And then, of course, the Russell 2000, which is still sideways. I mean, it's up and it's down, and it's not breaking out. Until it breaks out of zero, or since we've been going sideways for so long, until it breaks out above 0 or below 23, there's really nothing going on. Other than the intermediate line is back down below. Not only is it back out of the bullish territory, it's below the midpoint of the chart and making a run at the bearish territory again, similar to what you saw over here. Again, you saw there was in the meantime there was some bullish moves in between these runs. There was a bullish move right there in between that run to the 23% line. So we'll see if this ends up being a bullish move in between a run down to the 23% line here. You look at their weekly charts here. Let me pull up the weekly chart for the S&P, and you can see again a week after getting a cluster. I mean, very, very strong move. The momentum line dropped, but not very much. The near-term line's very entrenched. That's the case for the Dow too. At least in this case, it's the momentum line that's entrenched, and the Dow's staying in this bullish territory, at least in the upper half of the chart. Strong intermediate rally into the upper reversal zone, despite the weakness we had over the last few weeks. Remember, it did have more weakness than most everything else here. This is on the daily chart. Sorry, that's the weakness it had. Let me go to that weekly chart. There's that strong near-term line, momentum line dropping, intermediate posture strongly bullish a week after a cluster. Even there's that weakness I was mentioning. Puts it in context there. This is the Russell 2000, or excuse me, NASDAQ 100, strong intermediate line, strong near-term line, momentum line falling a little bit below 50, and then there's your Russell 2000. Strong intermediate posture. Near-term line is not as bullish because we haven't been going up. And the difference here is the 30-week moving average, simple moving average, that green line, is well above that 23% line of this intermediate run. Compare that to the S&P, and we're actually below it. The Dow Jones also just a smidgen below it. And then the NASDAQ's well, but the NASDAQ is barely breaking above the 38. That's how bullish we've been here lately, to really extend away. So the Russell 2000, however, it shows how close it is to one of these kind of long-term breaks, because we've been so sideways and we've moved up so much. It makes it easier for this kind of move to occur, because it doesn't take much of a move to get a yellow line, if not eventually light pink shading on the market forecast chart. Alright, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen, hit that red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. Number two, you want us to do another video again tomorrow, or Monday, excuse me. It's a quick way to give us feedback if you like our videos. Of course, if you don't like our videos, you don't have to click on anything. But if you do like them and you want to let us know, hit that thumbs up icon. Also, comment down there. What stood out to you? What questions or comments you have about our videos? Post those in the comment section. Join our website at marketscholars.com. There's a link up there popping out in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between these videos from day to day. There's my handle right there at DavidSettle42. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us here on our blog, I invite you to check out some of these things over here on the right hand side of the page. Our Market Outlook Live, our trading rooms, all of these are available for all of our paid subscribers, our monthly and our premium subscribers. The difference, our premium subscribers get access to all of it for cheaper per month for 3 years instead of just month to month. And in addition to that, premium subscribers get access to all of the class forums where we have our custom content, as well as all the tools that we developed here, so including the charts that we use in these videos. Come down here to the right, click on this heart. It opens up a new tab. Hit that like button there. Come over here, hit this thumbs up icon, opens up another new tab. Hit that like button there as well. Again, the more you do that, the more people will see our content, the more engagements we have. That's why we ask you all the time. So it really helps us out. We do appreciate those who do hit those likes. You can do it right now while you're watching. Just kind of get in the habit of that. Really goes a long way for us. It also benefits you because Twitter and Facebook will promote content within your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here so that you can always see our stuff. Alright, let's get back to the charts here and let's take a look at the other weekly chart with the 1040 crossover. Again, very, very high PPO. Here at over 8%. As you can see, very strong bullish candles that we're seeing here on the S&P. That's the case on the Dow. I mean, Dow has an upper and lower shadow, but still a bullish candle, falling PPO. The NASDAQ is like I said, kind of going parabolic here. These are very big candles, really pushing up higher. The PPO itself is back above 8% too, and working its way back up to double digits. And then the Russell 2000, that's not the case. Lower shadow again. Lots of lower and upper shadows on the weekly candles. The PPO has been cut in half since we had it had a very strong run here. It's essentially been cut in half. But it's even with this weakness, it goes to show just how strongly bullish the Russell is. Because you can compare this number apples to anything else. So the S&P 500 its PPO has been very strong this entire time, and it's still at 8%. The Russell 2000 went parabolic here late last year, early this year, and then just has stopped on a dime. But even with this momentum getting cut in half, it's still got a stronger bullish momentum. So a wider gap between the 10 and 40 the moving averages than what you're seeing on the S&P 500, which has got only an 8% gap. The Russell's got a 10% gap. So again, it goes to show, number one, like who's got the poorer margin of safety with the Russell. But if you look at like the NASDAQ, it's growing at 8.5%, and then your Dow is less than 8%. So again, it just kind of shows the weakness. Like, the weakness that the Russell has had. I mean, it's nothing else has been cut in half. I mean, the Nasdaq, it kind of peaked over here, and I guess it kind of did get cut in half from its peak going into September before falling down here at the smallest gap it had, and it's starting to rise a little bit. But like the S&P 500, it got up here in early this year to 8%, and it's been stuck at 8% this entire time. And now, granted, it hasn't been stuck. We've been rising. We've been rising at the same momentum, at the same very strong momentum for months. Like, again, this is typically when an intermediate run would have ended in January. But instead of ending the intermediate run with a red arrow and a pullback, which would have been typical for the February-March season from a seasonality standpoint, instead of ending that there with a red arrow, again, like we saw in the NASDAQ, because we did get some weakness there in February and March. But instead of doing that, we continued higher. It's like we've been holding our breath. We took a big inhale in, and instead of exhaling, we've been just holding that breath at the same level, very strong level, this entire time. So it'll be interesting to see how that unwinds. As you already see, it's been unwinding to a degree on the Russell 2000. Let's take a look at some of these other oscillating charts. The three green arrows on SPY, you can see we have three green arrows. We talked a lot about the MACD today and about the idea that we could be starting a convergence, right, where you diverge and then you converge, and the MACD histogram looks like it has peaked. Now, we've gone up a little bit, but it looks like we've hit the peak on the histogram, and usually after we hit the peak on the histogram, we hit the peak on the blue line on the MACD itself. So it looks like that's the case there. So you can see, like, now granted, on the NASDAQ, I don't think we have gotten that peak necessarily. We kind of have. You can say like up here was that peak, but we went from a divergence to another divergence. So since this divergence, it looks like we got a peak on the histogram there. And again, see the peak on the MACD comes later. This has been a very gradual divergence here, but you can see the histogram's been dropping. So this looks like it's actually the peak of the histogram, and we've continued to rise. Of course, when you look at like the Russell 2000, we have been converging. Like, we peaked there, right there on the histogram. Then we peaked on the blue line just a little bit later, and we've been converging this entire time, and we're actually diverging to the downside. Today's rally on the Russell just got us to the 8-day moving average. It shows, again, just how bearish that is there. If you take a look at the directional movement index, obviously we're in a directional move on SPY. We're in an even more directional move on the Qs, as the ADX is already above 25. When you look at the trend strength, that's confirmed here. We're in a very strong trend, above 5, above 80 on the Qs. That's a hard thing to break, right? It doesn't break easy. The S&P is very close to that level. We are almost at 80 on the noise balance indicator, and we're at 4 on this. So again, 5 and 80 are the key levels to watch here. We are in a trend, a directional trend according to the dotted lines. We're above both dotted lines. That's not the case on anything else. Of course, it's definitely not the case in the Russell, where we continue to show a noisy pattern. But if you take a look at the diamonds, we are, again, we have to get above 2, which is right there, to get a trending move going, above 2 and above 65, which is right there. You notice we haven't been able to, and we still aren't yet. Now, we do have a weak bullish trend, but we're not quite to a, like what we're seeing right now on even SPY, much less the Qs, which is just going, like I said, going parabolic. And you see that as well in the RSI. Let's go with the NASDAQ here. The NASDAQ has been grinding. The CCI has been diverging, even though the RSI has been really moving up to extreme high levels that we haven't seen since that last August. And just for some perspective on how often the RSI gets up there, we saw that in early 2000. We saw that here in July. We saw it here in early 2019. We saw that in early 2018, a smidgen before the late 2018 intermediate pullback started. We saw that here in April of 2000 before that period of weakness. We saw it in February 2000. We went really sideways after that. So, you know, getting these extremes on the RSI, you know, typically, especially when you coincide with the divergence here on the CCI, it just means that once we do finish this parabolic move, when it's over, then you know, kind of watch for the for that exhale to finally start coming here. Here's the parabolic SAR, something else to kind of watch for the NASDAQ 100. You can see yesterday's move still didn't flip that parabolic SAR to the upside. So we're still moving up. We're still moving up, still moving up. Not the case on the Russell, right? You can see the Russell actually has flipped the dots to the upside. And if you look at like SPX here, we did flip just for a day the dot back to the upside. So we're kind of there now. We flipped it back down, but you just kind of watch for, you know, those dots to get flipped to the upside and then to stay up there, and that's when, you know, what a sideways action turns into more of a bearish action there. So, you know, again, that also shows up. The other thing too we watch for is the Arun indicator, and the Arun on the NASDAQ is nowhere close to getting a bearish crossover, right? So, which means you don't get the bearish crossover until we get a 20-day drop, and we're not anywhere close to that. To show you what this looks like, what that Arun looks like, this is what the 4-week chart looks like. Again, for us to get a bearish crossover, like we'd have to get a new low point here. And you can see that's not going to happen anytime soon on the SPY. It's not going to happen anytime soon on the Qs. And the Qs, the low point will move up to there. So the red line is moving up. And the green line is moving down as we're not getting new highs. But again, to get a bearish cross, we'd have to get a new low point here. And that's not going to happen anytime soon. There was closer to happening on the Dow. We got a little bit of weakness there, but obviously not now. But keep in mind that you see these gaps. These gaps, you know, these are gaps that, don't be surprised if they don't get filled in early next week. Now, I don't think that will drop, but, you know, like this gain, as bullish as this was going into a week on a very light volume, keep in mind that that gap is a common gap and more likely will get filled in sooner rather than later, just like this one ended up being, getting filled in sooner rather than later. All right, so, but now look at the IWM, and you can see we did have a bearish crossover. We did get a new 4-week low point, so this is what it looks like in the Arun. The red line did jump up to 100. Did cross over. It crossed over the green a long time ago because the 4-week high has been so bearish. But now they're kind of both moving down. But you can kind of see just how bearish that looks on IWM, right? And it's, you know, we're closer to getting a low tag than we are a new high tag. But that high tag just keeps moving down to 0, and that low tag hit 100, right? Hit 100 there, and has potential to you know, hit 100 again if we were to fill in that common gap and make our way back to a very low volume area in this short-term chart. So, you know, we've seen the correlation. Interestingly enough, I saw this posted on Twitter, I think. Let me remove all these, oops, and bring in the correlation chart. And I want to show a correlation here of the Russell 2000 with the NASDAQ 100. So this over the last two weeks here. And then let's go Russell 2000. Typically a very, very strong bullish correlation. There's 0 right there. So typically very strong bullish correlation. There are times where it's not so bullish, and you can see right now it's about as the Russell and the NASDAQ are about as negative a correlation as we've seen in a long time, going back to all some of these areas here. So again, it kind of shows that on one hand, the Qs are bullish and are making a parabolic move. On the other hand, the Russell is bearish and has potential to be more bearish next week too. And so those two can cohabitate as they have been over the last few weeks. If I look at a comparison here, comparison of the NASDAQ, compare the Russell to the NASDAQ as well. We'll take off that left scale and just throw on, that percentage chart. Let's see, that didn't show. Oh, it's down there. No, it's right up there. Here we go. Here's the last 2 weeks, and let me just bring up, like, say, a 20-minute. There's the last 2 weeks of the Russell, excuse me, the NASDAQ 100 up 3%, and the Russell 2000 going in the wrong direction. They can keep doing that, right? We've seen that here. We saw that there. And that's what's driving this correlation down to these negative levels. The Russell's been going down, and the NASDAQ's been going up those few days. Let's take a look at how volatility finished the week. So let's look here. Oh, excuse me, let's go volatility, sorry. Right there. There we go. So big gap up yesterday, big gap down today, back to extreme lows finishing the week, as we have been just about every week lately. We've been finishing at extreme lows for volatility. If you see, you can see the long upper shadow there, but you can see the extreme lows. 1, 2, 3, 4 weeks out of the last 6, we have closed at extremes on Fridays. And we've got, last 3 weeks, we've started on Monday with big moves to the upside, right? So before falling back down, and actually a few weeks ago we rallied and finished the week at a high on volatility, which is kind of rare to get an open candle. You can see most of our candles are filled in. Volatility drops throughout the week, doesn't rise. But as I've shown you before, as we head into the last week of expiration, if you look at the options expiration cycle, this will be our second consecutive options expiration cycle without a long upper shadow. And that is, it's rare to get one, right? And there's a couple in a row there that ended up coming down. But it's rare just to get the one, and now we're going to go a couple without any long upper shadow move, which again opens us up. And this will be the second out of the last 4 options expiration cycles that we finish at an extreme low. Now we haven't finished yet. We got a week left, so we'll see how we finish. But it kind of goes to show just how kind of rare it is to finish at these cycles. And last 2 times we finished at extreme lows, that led to a couple of options expiration cycles where volatility rallied, where volatility rallied here. So, and you can see over here even volatility rallied if we end up closing at this extreme low. And I wouldn't be surprised that summer we don't go anywhere next week. Don't be surprised if we end up finishing there and then, again, getting the long upper shadow and the move higher over the next couple of options expiration cycles ending in August and September, where seasonally volatility tends to ramp up those periods. If you look at a seasonal chart here for the VIX, here's the seasonality chart. Sorry, load style, seasonality. And then look at the VIX. Look, this is when volatility tends to ramp. Right here at July expiration, there tends to be a low point. That's next week. It's actually July 21st, but right around July expiration, it goes all the way up through October expiration into the beginning of November is when volatility typically peaks. So, we're heading into a seasonal period of time where volatility ends up being pretty bullish, and we start to ramp, and that typically coincides with, kind of intermediate pullbacks. But we might get a week or 2 here all the way through the end of August before we actually start getting that jump in volatility. All right, so we're going to take a look at what's driving this price action this week and today. But before we do, just to summarize the technical outlook, we're very strongly bullish. We are diverging between the NASDAQ and the Russell. We've talked about this two-headed market. That's going to continue to be the case. I mean, the Russell's not going to go fall off a cliff, go down, and the NASDAQ's not going to go to the moon. But So they're not going to be that wide of a divergence, but they're not going to, the Qs are going to outperform more than likely, heading for at least for another week, maybe into the week or two after July expiration. But then, and especially if we end up next week with extremely low volatility, that sets us up for a seasonal period of time where volatility typically rises. It will set us up from a variety of technical indicators, depending upon how directional the move ends up finishing, right? Because we are in a directional kind of parabolic run right now. So if we end up pretty bullish this week and we get a parabolic move at the end to expiration, or if we kind of end up sideways and then get our parabolic move the week or two after, that's going to set us up for a risk aversion trade eventually coming out of this expiration cycle. So and market forecast all the indicators kind of fit that narrative. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at to suggest why you're a lot more bullish or a lot more bearish than I am? All right, now let's take a look at what's driving the price action. Let's look at this week alone. So we'll look at the asset class comparison chart, and we'll go to this week. So let's go all the way out to July. There we go. Like a 10-minute chart. So, again, I mean, this is like risk-off trade, right? I mean, the Qs were up. They came up at the end of the week. SPY was bullish, closing at its high of the week. I mean, so it looks pretty bullish, like we talked about from the outset. But the reality is, I mean, look at bonds, look at gold, look at real estate, and the dollar for most of the week was doing pretty well. And look at emerging markets and small cap stocks and commodity prices. I mean, they had a good day today, but they finished the week down 1.5, 1.25 to 2%. So I mean, this is a risk-off type trade. It wasn't as risk-off today. We finished the week with a flourish, so that helps, definitely helps us from being too bearish. I mean, there's small cap stocks really rallying because they were oversold, right? Commodities really rallying. International stocks, both developed and emerging, really rallying, and real estate ramping up to. Long-term bonds had a great week until today. I mean, so this is kind of more of a technical oversold bounce on these risk asset classes and overbought sell-off here on long-term bonds. Let me show you what that looks like on their own charts. One more thing too about the the major economies out there. I've been showing you these charts. I mean, you can see why we had the big bounce in China. Look at Japan, Germany. I mean, all of these. Remember, you get your biggest moves below the moving average to the upside, and that's where they all are right now. They're all below their moving averages. So you're going to get big up moves. The question is, are we going to continue to go through these moving averages, or are we going to just now follow those up with big down moves and fill in these gaps, at least on the S&P? So that's a big, stark difference here in a lot of these economies versus the U.S. Japan's not so bad, but you get the picture. You get the picture. Now let's take a look at like TLT, and you can see again TLT, which had been also going parabolic. Its sell-off today was just to get us down to the 8-day moving average, and that was it. I mean, hardly a risk-off move. It does look like we've hit the peak potentially on the MACD. We'll see. Remember, the peak of the MACD, you tend to converge for a while as you still grind higher. So we still can move up to the 62% retracement level before we really cross over zero and get a divergence to the downside there. That's on long-term bonds. Look at the euro again. We've been so bearish that now we're moving up. I mean, that's hardly like a trend reversal. It's more of we've been so extremely bearish and with a little bit of divergence here that we're just going to move back up, probably up to that high point right there, 119.75, and that's it, right? So in any kind of like risk on flourish to finish off expiration, to finish, maybe into the week after expiration, that's probably about as high as we'll get, and where the 30-day moving average will meet before you kind of exhale again. And then finally, let's take a look at gold prices here, and we can look at crude oil too. But let's look at gold first. There's gold, the nice little rally it's getting, and then crude oil, which had been so bullish, is just showing a little bit of weakness, and that's it. So very strong trend still. In fact, if you look at commodities as a whole, as a basket as a whole, we're still above 60. We're not very much above 60. We're kind of like, and we're diverging there on those intermediate peaks and these near-term peaks. But we're still hanging in there. We haven't, started the exhale yet. So again, I think we still got maybe one last little hurrah in the risk trade, and probably won't come necessarily out of here as much as it will obviously come out of here, where we're, obviously this chart is telling us we are in a parabolic mode right now. So now let's take a look at how the sectors are performing, and let's look at just this week alone. Again, remember, kind of a risk-off week when you look at it as a whole. So let's see how the sectors look like. Your two strongest sectors were utilities and real estate. Now, technology and discretionary held up pretty too. Again, the Qs are looking like their own safe haven. I mean, they're becoming a safe haven. But you can see everything else. Like energy was down this week, 3.5%. Financials were down. They had a great day today. Again, kind of a rebound day because how oversold they were going into today. But industrials, materials, financials, energy, all struggling. And today was just more of an oversold bounce. Again, you look at the 12 grid for these sectors, and you see a lot of them are still below their moving averages. Like industrials is a little bit above that now, and staples is close. Utilities is there. Real estate really ramping up, and healthcare, technology. You can see discretionary getting another cluster here. I mean, they've all gotten clusters here. And the reason, so again, it shows how directional and how parabolic their moves have been. But also you can see why we're so bullish in these other areas, because the biggest moves, both to the downside and the upside, occur when you're below moving averages. And that was the case for all of these indexes. Now the question is, are we going to be able to get through and diverge to the upside, or are we just going to follow these big moves with big moves again to the downside? That remains to be. And again, can we keep going down on these while these still go parabolic or directional and parabolic? And the answer is yes. That's the way we've been going for the last couple of weeks, and we could very well continue that. But again, it will go to show the kind of market we're in, and eventually what will end up happening if that divergence extends for another week or two. In the meantime, I just want to take a look at our trade idea of the day, and that is actually on Merck. So let's take a look at Merck here. Merck, actually we have to pull it up on this chart because this account's got some data issues. So let me pull this over here, at least for this stock, not for all the other stocks, just particular from Merck. And you can see this is what Merck looks like on its market forecast. Dark green shading, green like getting above 80, in bullish territory. But you notice it doesn't look too bullish on that chart. When you look at like its long-term chart here, you can see that we've actually been in light pink in the death cross environment for the stock. We've been we're rising, but we're sitting right around zero. Not really a directional move one way or the other. You can see that in the trend strength indicator as well. We're really flat, like very, very minimal moves. Not really a strong trend. Again, one way or the other. You look at the Bollinger Bands from Merck, and we are sticking right around a point of control. Big point of control, very tight range, very large point of control in this area, acting as a big, with falling bandwidth. So we had a pretty decent bandwidth. We're just grinding now in the middle of the bandwidth here. And then finally looking at its directional movement index, and you can see, we've had a pretty bullish move up here above 25, but the ADX is really low, so it's not really a directional move. We're not getting below 20 on this either. So that sets us up, as it always does, for a sideways trending trade. In this case, an iron condor spread. So we'll take a look here at selling the 82.5 and the 85, and then selling the 75 and buying the 72.5. So excuse me, you'd buy the 85, sell the 82.5, buy the 85, sell the 75, buy the 72.5. So you're the short contracts are your strangle, the long contracts are your long strangle for protection, essentially. We ended up getting in. Where did we end up getting in at? Let's see here. Let me get rid of this one. Looks like we got $335 times the 5 contracts. So right around the 60 cents, a little bit more than 60 cents for a full position size. Those break evens I had on the chart here are right there. So here I'm going to get back to the Bollinger Bands, and you're going to really like this. The break-evens are right around, so you've got a strong support down there, which is at the bottom of the value area. We'd have to really be bearish, and of course anything can happen, so we'd get out if that happened, but the odds are lower that we're going to break down below that break-even, because that's where that's where the value area is. And then we've got room to the upside, and you got very strong resistance, volume resistance to the upside, and volatility is, we've got all of our risk is to the downside, where I'm not too concerned. So really good setup on the Iron Condor, and there's, as long as we stay in that area, we make $335 going into August expiration for our full position size. So that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. All of our subscribers, even our free subscribers, have access to that forum. Open up any new threads with any questions or comments you have. Reply to other people's questions or comments, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video down below, follow me, like our videos on Twitter and Facebook as well. Have a great rest of your weekend, everybody, and we'll see you all next week.